Good afternoon, everybody. It is 12:59, and it is time for DeCryptoMarkets, Friday, the 26th of October, and time to look at a whole lot of everything going on, but not really. The only things that we're really seeing a lot of movement in is the equity markets and the forex markets. If you take a look at the S&P 500, we can see there was a pretty large dip down earlier in the day where we actually made new lows, and then that got bought back up. That's where we're sitting. The NASDAQ, same story. It actually bounced off of a short-term trend line here, and it's not looking like it wants to trade up again. We might very well see some sustained pressure and selling into the end of the afternoon here. That's very possible. We'll see though. Currently, the Dow and the Nasdaq are both sitting positive, but we'll have to see. The dollar index trading down. The dollar facing a little weakness after the GDP report. GDP was up. It was up less than it was the last quarter. Hard to beat that 4.3% though. And what else? Oh, yes, forex markets showing a pretty strong change in direction as well. We see the euro catching quite a bit, the dollar yen having a lot of sell pressure, but it got bought back quite a bit. We sold all the way down to let's see, where did we open? We opened this 4 hour at 112.13 and traveled all the way down to 111.38. A bit of a drop that was promptly, well, I don't know if you want to say it was promptly bought back up, but over since from 10:11 to noon, it got bought back up. And just like U.S. equities, we'll see if it wants to sustain this drive. Otherwise, we're probably just looking at a pullback out of this swing, looking at it trade lower. Cryptocurrencies, what we have going on with them. Well, a lot of this. Nothing. We are continuing to see a flat market, extremely flat market. In fact, I'm looking at the weekly volume here, folks, and according to Coinbase, this is Friday. I know we've got Saturday and Sunday left. But according to this volume, we probably are going to experience the lowest traded volume, at least on Coinbase's data, ever. All right, this is looking up to shape as the lowest week traded ever so far. Okay, that should tell you something. Ethereum, looking at the tether pair, if we look at that on a daily chart, I mean, this is what we have going on here. We were going down for 1, 2, 3, 4, 5 days straight. Then if we look at the current day, we're actually trading a little bit up. The volume's a little bit up. We've basically traded, let's see, we went from an open on the 21st. We opened at 207.91, and right now we are trading at 202.88. So a whole $5 range has been traded in here. There's a short upper trend line here that we're, or a bullish trend line we see. That seems to be holding so far. There was quite a bit of buying that stepped in here on, let's see, that was at the London Open, 3 a.m. Central Time. That got bought up and probably sold off because it likes to trade in a range here. I mean, if we do some trend line drawings, you know, just kind of fan them out from this swing. And connect it to the next lower highs. This is kind of what we're seeing have happen here is we're flattening and planing out here on those lows, or on the highs. If we look at the lows, I mean, we're pretty flat in our distribution here. Just a, a really boring trading here. And trying to find, there's a danger to wanting to find a trade opportunity here, because I've looked at this on small time frames, and there's really not a lot of trading to be done. This is literally a park and bark market. This is a sit and hold and hurry up and wait. Not a lot going on here to look at. The $200 range on the regular dollar pair seems to be holding. You know, we traded below this yesterday, but again, traded back up. Where did it get stopped? Right at the angle here in that triangle, and we're still holding in that zone. And yeah, it's just it's just a very tight, constricted trading range that we don't seem to see any urge to break out of yet. And you know, if I look at the volume here on the weekly, yeah, this week is actually Ethereum's volume is actually a little better. But we are, compared to last week, we are currently trading higher. Okay, we haven't created a new low. And the interesting thing is that we are probably going into our, we will more than likely end our 6th consecutive month of straight selling pressure, which is an interesting move. Also, it looks like we'll be forming an inside bar on the monthly as well. There has not been an inside bar on the monthly of this chart, at least, with the since, let's see, the last inside bars we saw were, well, actually, never mind, take that back. Inside bar right here, and then there was an inside bar in July of 2017. And an inside bar in October of 2017. Just look at the volume and the participation in October of 2017 compared to now. Very, very tight range. We'll probably see that echoed somewhat in. Actually, we don't. We actually see a lot of expanse here in the October month. But looking at Bitcoin on the monthly, we see that there is a excuse me. Oh. The composite index is quite down here, and we should see the composite index as it's curl up some more here at the close of the month, as we're looking towards next week for this to close out. If the composite index crosses above the fast average on the monthly, that's going to be a telltale sign. There are not that many great conditions. And here's the other part, too, is that the RSI is not as sophisticated as the composite index. The RSI can't detect a lot of things that it's very limited. Okay, I don't know when people will stop using the RSI as a main tool, but you know, it should be used in conjunction, like what Constance Brown suggested was she uses it in conjunction with her composite index. And so one of the things that she mentioned in her book, actually, what was it in? It was in Technical Analysis for the Trading Professional. She talked about oscillators, and you know what? Actually, just let me pull it up here. I know I have the digital version. I have the hard copy, and I have the digital version. Let me see here. Sign in. I'll pull that up. Technical Analysis for the Trading Professional. There it is. Okay, now, actually, this is in the, I think in the very first part. Also, yeah, it's in the first chapter. oscillators do not travel between 0 and 100. Okay, let's build an range of the RSI. Bounded oscillators have a set value where they travel between a certain 2 points. Okay, they have a max and a min. So for the RSI, it's 0 and 100. The composite index is an unbounded oscillator, so it can travel below 0 or above 100, but it can travel below 0. That's the most important part. And she wrote that the standard default period, blah, blah, blah. And each time, let's see, there's ultimately, she wrote about adjusting the normal ranges on the RSI depending on how the market is trending. Well, I'll look for it and hopefully remember to do it by Monday. But in the RSI, if you're using it in a trending market and you know something, can I explain the composite index better? Yeah. Basically, the composite index, it's the RSI with a momentum indicator that it attached to it. So, or a momentum, the momentum indicator itself, if you apply momentum into the calculation of the RSI, that's where you get the composite index. And the composite index is basically, you can think of the RSI as Windows 3.0 and the composite index as Windows 10. And so the really don't notice it much on the, well, actually there is one here on the monthly chart. You can see a noticeable divergence. There is a higher high, not much, but there is a higher high in the RSI, but there's a lower high in the composite index. Not much of a change there, but it's there nonetheless. You can see divergences, and that's the thing, like, if you spot divergences between the RSI and the composite index, chances are you're going to see a move. Okay, it's a lot different than, whereas you see divergences between the RSI and price, those happen quite a bit. You're going to see regular divergences and hidden divergences, and really those are just part of your analysis and taking a trade. They are not a primary source of a trade. Divergences with the RSI are basically telling you, by the way, heads up, this could happen. The signals are stronger when you get into larger time periods like monthlies or weeklies even, but mostly weeklies. I think monthlies are too slow. But nice thing with the composite index, actually, if we can look at this. On let's look at Ethereum. So if we look at Ethereum here, and we have the RSI up above and the composite index down below, you'll probably see that there are differences in there's certainly similarities in the structure. So when there's a move that is that has honest momentum behind it, you're going to see that reflected in the composite index. The composite index will confirm the RSI. But you'll see things that are not authentic, for instance, right here. So with the RSI, you would not be able to see that there was a divergence because there's a higher high here and a higher high in price, okay? That seems perfectly normal, all right? All we get is an overbought condition. The composite index tells you a different story, okay? It diverges from both price and the RSI. And basically, when you get strong, like, I don't want to say it like this, but this is the best way I can think of saying it, is that the RSI and price divergences, while they're not, they're just kind of heads up. A divergence between the RSI and the composite index is something that may it has a higher probability of planning out than any divergence between just price and the RSI. If you're comparing the RSI and the composite index together and you notice divergences, pretty good high probability that very soon you're going to see a change in direction. Okay. Of course, you want to confirm that with other indicators as far as length of trend. Where are things going in relation to areas of support and resistance, all that jazz. Okay. Okay, where was I at? But looking at the Bitcoin trade on the monthly chart, there is a strong bounce from a very, very low level. In fact, I think the lowest, this is the lowest reading that, well, it's actually a shared low, I guess, but the lowest level on the composite index on the monthly ever is we're sitting right below it. Oh, and what I was saying with the RSI is that if something's in an uptrend, the overbought conditions by default are 70 and 30. And Constance Brown, Connie Brown, she said that the parameters have to be changed depending on the trend for the RSI. And correct me if I'm wrong here, I can't remember, but I believe the overbought condition changes to 90 in an uptrend, and the support level changes to 60. And then in a bearish trend, your oversold condition is down at 10, and the oversold condition is at 10, and then that support or that resistance level is at 40. All right. Clearly, we are in a very strong uptrend on a monthly chart. This is a very long biased market still. Hard to say that when you have this price action up here, but it is still a very long biased market. And we're seeing that reflected in the level of the RSI, but then the composite index is showing us that there's a lot more momentum behind the move on the current month that we're trading, even though the volume is yuck. I don't know how that is measured, but I know how it is, but I don't know why it's painting that. But anyways, 4 hours. Gosh, this is just a very, very constricted market. I don't know how else you want to look at it. I mean, there's just Cardano actually looks like it caught a bit of a bounce there. Yeah, it looks like we might have a breakout coming. Oh yeah, definitely on the 4-hour chart. This is looking pretty positive for a breakout trade. Definitely. These are excellent conditions for a breakout trade. Basic attention token, selling pressure. Ooh, ZRX got hit hard. I did not like to see that in my account today. ZEC got hit hard, but it got bought back up pretty nicely. And then XLM is actually maybe showing a little bit of supportive action there, but a lot of the Coinbase 5 are doing okay. Nano, damn it. Catching a bid. I would totally anticipate the end of the trading day seeing some type of crazy price action in our alt markets, perhaps extending into the major pairs. And just watch this weekend. There's a whole shit ton of culminations and confluent zones of time cycles that are coming to a head here. In fact, the equity markets are seeing that right now. And I think the weakness of that is diminished. I think we're finding... Actually, we're going to start trading lower, I bet. Oh, the Dow did not like to stay up there. It's looking a little weak. Cool. Bring it down, baby. Bring it down. Let it burn. Analysts in the stock market consider correction territory anything down 10%. The NASDAQ is definitely in the correction territory. I think that this guy has a lot farther to go. I think we breach. I think we go down to test 6,200. I think that's definitely in the cards. I think we get a full 5 waves lower. Or at least an ABCD drive here. I think we have another wave lower. But, yeah, we'll see. Okay, quick little thing on Ethereum's chart. I know it looks pretty ugly. But there is a very, very important cycle coming up here. I know all these lines intersect and crisscrossing. It looks like a bunch of stuff going on, but just look at this zone right here. Let me highlight it. Look at all this business right here. Okay, it's coming up right on this blue vertical line, and we're trading near this 1/8 major harmonic. So this entire level, this is the end of not the end, but we're coming up on the second half of this 192-day law vibration cycle. And the fact that we're approaching that vertical pivot in time in proximity to price being right near a major harmonic level, which is that yellow line there, that is the 1/8 major harmonic. And because we've been in such a deliberate one-directional trend, there is a very, very, very... We won't get a lot of heads up if there's a trend change that happens on what is that? The 28th. I mean, really, it could happen before that too. But because we've gone through pretty much 2 full 192 days, or a full 192-day cycle, and then going into halfway through, and we're going into our 96th day, this is panning out to be a pretty volatile. This is dangerous for bearish traders to be trying to short this market. First off, you've heard me say this before, but you should not short a market that has already been down about 80 to 90% from its all-time highs in a short period of time. All right, that is an amateur thing to do, to short something that is down that much. Okay? Your time to short ended back in, really, it ended back in May. Okay? I mean, yes, you can say, well, yeah, there was a lot of opportunities here, but this was all relatively pretty choppy price action, and I would not be caught. I mean, I did not want to. Actually, I did short Ethereum. Perfectly honest, I had been shorting Ethereum, but it's not a very easy short by any means. It's a dangerous short. But certainly around here, I mean, let's be realistic and say ever since July, your time to be shorting this market was over. Ethereum is at the 1/8 major harmonic. So that is the final straw. That is the final support level where we're sitting. If prices trade for any length of time below this value area, and I mean, it can trade below it, but you know what I mean, like if we're way away from it, it's pretty ugly, because the next major support level, yeah, Santosh, you're dead right. It's dumb to short this market. And I'm going to keep repeating this for those who watch the recordings, and for those new folks who come in and watch this live, and for those who watch us in the morning in Forex Lens. I'm going to use Bitcoin as an example, because Bitcoin is basically the S&P 500 ETF. It's the ES. It's the barometer of the health of the market as a whole. And let me just clear off our screen here. This market has not made a new low since February. Okay? It has not made a new structural low. And what do I mean by that? Did we breach the low of February? Yes, we did. We made a lower low, number-wise. We made a lower low in June. But otherwise, if you can, listen, if you really believe that there have been new lows made, I really need to see some type of evidence of that, because anybody can look at this and eyeball it and say, well, yeah, this is a pretty flat market, isn't it? This is one of the most ridiculous looking markets I've ever seen, and it's actually like it's becoming almost comical, like textbook. Yeah, Santosh, that's the thing. I kind of talked about this a little bit yesterday as far as what is the catalyst. I don't know if there actually has to be one, because we know the time cycle wise that back in June and July the trend actually changed in time cycles. So price is heavily divergent from where it's at in relation to being squared in time. So the ultimate, the present value area of where price is, if you can imagine price and time being in equilibrium, prices are sitting around the 18,000 area right now. And so we're crazy divergent from that. And that's totally normal in Gann analysis. It's totally normal for price to diverge from time. That's why we get markets that look like this. That's why markets have these peaks and valleys. It's because humans, humans don't react to time naturally. Well, we eventually have to, but there's a lot of things that humans are slaves to the pattern in a market and in nature. It's just we have the ability to go too fast or go too slow, and right now it's going too slow, which is probably evident by anybody's analysis. As far as the catalyst, I don't know if you're really going to get one, because think of the participation in the market as a what's the word I'm looking for? Like it's just a ratio, okay? At this level, if there's, let's say there's 1 million people who are trading Bitcoin, now there's only 1,000. Okay, we don't need a large percentage of 1 million former traders to start pushing this market up and move it dramatically, because even a small number of traders, like if the whole participation is only 1,000 traders, I'm just throwing that number out there, it's only going to take 10% of them to move this during a low liquidity time $1,000. It's not going to take a lot of people to move this market dramatically from its present value area. And in fact, people who work for professional funds or who have been trading for a long time and have sizable personal accounts, they know that, and that's actually the kind of conditions that they wait for, because it's very risky to try to move and make a market when you know there's a lot of dumb money out there. All right, it's very risky to do that, but it's a lot less risky to do it if you know that participation has dried up, if you know that you have enough powder to kind of control and initiate the move. Then you're going to be able to do that. There's a lot of wash trading that's going on. Wash trading is it's very popular in futures and forex and the options markets, where you have exchanges or brokers who are basically just trading against each other to give volume. I mean, that's why brokers like retail trading, because retail traders provide liquidity in the market. I mean, day traders in general, they're the ones who provide liquidity. They provide movement, they provide momentum, they provide all the speculation, the things that are necessary to drive an active market. So a lot of brokers in forex and in futures markets and options, and certainly cryptocurrencies too, you can see it. You'll have a lot of just they're just trading against each other. They are, the net move is zero on their balance sheet, because they're just trying to make sure that things are staying liquid. But eventually that's not going to work anymore, and you're going to have participation step in. And I tell you what, it won't take a lot to get people back in the market either, because if there's a single news article that says Bitcoin traded up for $1,000 and stayed there, it's just gonna have a snowball effect. You're just gonna see more people jump back into the market, and it's very evident that I was just looking at Cardano's order flow on Coinigy. I was looking at its order books, and just don't want to share my account detail. Give me a second here. Let me log into it quick. I love Coinigy. Doot doot doot. Oh shit, wrong one. What? Where are you at? I was looking at Cardano's Bitcoin pair. So you had the order book here a few days ago was like packed with 250 to 300,000 contracts. I'm always going to call them contracts, folks. Futures is kind of what I started trading, so I always call the order book contracts. But there was 250 to 300,000 on the book here, and then it promptly swapped to being on the. It's changing from the bid to the ask. These order books of 250 to 300,000. I'm sorry, no, it wasn't 250. It was like 2.5 million to 3 million. Cardano was filling up every single decimal, and it was just kind of rotating. That is wash trading. That is the exchange making sure that there's liquidity in there for their customers, or that it looks like there's liquidity. If you go to some exchanges like KuCoin or HitBTC, I don't know, not KuCoin. I did an arbitrage trade on between Binance and HitBTC yesterday, but HitBTC, you'll see hours where there's no candlestick, there's nothing traded. Okay, they're not doing wash trading. Binance does. Bitfinex definitely does. Bitfinex is shystery. But anyways, there's a lot of wash trading going on. And the thing is wash trades are algo driven. And I run an algo for a private fund. It's my trade system that I manage. And then it's the programmer that they hired, we work together. And our algo runs on Kraken, Poloniex, mainly Bittrex and Binance though. But you know, once there's a price that is that breaks the variable for the wash trades, then it kind of gets canceled out. And I don't know how what the logic is for the next process, but you see things kind of flip off and on. It's like a switch goes on and off, and that's the kind of activity we'll see when it finally breaks out of that range there. But astrologically, yes, there are things going on. So let's go to Bitcoin's chart. I'm going to start saying astronomical. So astronomically, we are in the Venus retrograde. And remember, we've been talking about Venus retrograde. Why did the S&P 500 crash? Probably because the Venus retrograde cycle always causes, or it doesn't cause it, but it's whenever the Venus retrograde cycle's around, usually the stock market decides to take a crap. Don't know why that is. It just seems to happen. Probably because these are... What I find fascinating is people discount this stuff. They think it's like all voodoo stuff, when if you think about it, these are fixed cycles. This is about as natural a time cycle as you could get. You know, people go to bed according to the rising and the setting of the sun, and that's not crazy. You know, why do you go to sleep at night? Because it's dark. Why is it dark? Oh, the sun's not on our side of the planet. oh, that's voodoo talk. That's voodoo. That's just crazy talk. But when Venus retrograde cycle happens, which we could plot out to infinity when the Venus retrograde cycle is going to go, NASA does it. But to suggest that a market could collapse during a normal cycle, that's voodoo talk. I don't get it. But it makes sense to me. All I have to do is just look at the, my wife. People say that the people who don't market experts who don't believe in technical analysis say that you can't use past data to predict future price action. And my wife, she's a psychologist. She's a PsyD, not a PhD. She's actually a doctor of psychology, not a doctor of philosophy. She's a doctor of psychology, legit mind reader, Yoda therapist. When I had mentioned that to her once, and she said, well, in my profession, the only way that you can determine any future human behavior is by looking back at past behavior. That's the only way to predict future behavior, is to correlate it to past behavior. And the market is nothing more than a representation of the mood of the masses. And if you don't believe humans follow patterns, or that nature follows patterns or cycles, you're in the wrong field. But there are set cycles, and the markets respond to them just like humans do. So astronomically, yes, we're coming to the end of a Venus retrograde cycle. There is also, we're coming right off of let's just look at these vertical lines here for those who haven't seen it before. These vertical blue lines, this is every 72 degrees of Venus. So every time Venus is at some type of 72 degree angle to Earth, that line is plotted. I don't know why, but at 72 degrees, 144, this is the longitudinal position. Again, this is science, this is math, this is something you can do by yourself. You can go to NASA's website and look up the longitudinal coordinates of a planet relative to the position of Earth in the solar system, and that's all this is. Okay, this is not about it's not some 1-900 number to Madame Cleo. It's not some chicken bones. It's not some witch doctor lady in a tent with a crystal ball. Okay, this is correlating one area of science to another area of science, and for whatever reason, the divisions of 72 degrees of Venus seem to show up quite a bit at major and minor swing highs and lows for Bitcoin. This is just a recent price action, 72 degrees, then 72 times 2 is 144. 72 times 3 is 216. 72 times, where am I at, is 288. And then 360, okay? But for whatever reason, 72 degrees of Venus, there's a high probability of the market developing a swing high and swing or swing low of some sort. I don't know why that is. Okay? But I don't know why the Fibonacci cycle is so constant in everything in nature. But it just is. Okay? And same with this. There are some other astronomical patterns coming up here, and you know what? Let me actually written about this on. I'm a paid writer for a couple financial sites, which is actually totally awesome because I write the same stuff in my journal, trade journal, that I do for these websites. So it's like I get paid to do the same work I'm doing for myself. Posts. Let's see. Is this somewhere around here? Not that. Oh, yep. Okay, here it is. So, oh yeah, there's a conjunction Now, these are planetary aspects, okay? Before anybody starts going nuts over aspects, planetary aspects, that's just a science term too. An aspect is just the description. An aspect is just an angle of two planets relative to where you're, like, you can do it from the sun, which they call heliocentric, or you can do an angle. You know what? Here, you can just see it. And I said this week too, but this software is called Optima by market analysts. This is professional grade software. This is used by some big time money people, okay? It has a whole bunch of Astro suite of software, a whole bunch of stuff dealing with financial astronomy, and a whole bunch of GAN stuff, okay? This is not just, if you laugh and roll your eyes at this, it's cuz you're either ignorant or you just are an idiot. And it's okay to be ignorant. It's not okay to be an idiot when it comes to financial astrology and financial astronomy. It's a real thing. Okay? Now, if it wasn't, there would not be so many people using it in the background. But here's an ephemeris. So this is just a picture of our solar system right here. Okay? Like currently. Okay? And it'll highlight, you know, what is happening here. So there's this says it's the sun and Venus formed a conjunction right up in front of us. I think that's actually one that I had. Sun conjunct Venus. Yes. It's actually not a good one for Bitcoin when you look back at it in history. Oh, duh. But, oh, and the wavy lines, again, wavy lines, these are planetary lines, longitudinal position of a planet, but transposed onto a chart for price. This is Jupiter. For whatever reason, Jupiter and its harmonics tend to develop natural swing highs and lows. Again, don't know why that is. It just does. Okay? Why do I get tired at night? Can't be because the moon is out and the sun's behind the planet. That's crazy talk. What was I doing? Oh yeah, aspects. Planetary aspects. So I'm looking up Sun and Venus. There was a conjunction. That's happening right on the actual exact date is the 26th, which is today. Okay. If you look at this brown line here, okay, it's actually got a lot of bearishness to it. Shows up right before or near a lot of swing highs. Basically what I'm saying is that prices seem to fall shortly after this aspect shows up, except when the market has been trending flat or has been trending down. And there's only actually 3 times that we've had these kind of conditions met when this aspect shows up. So this aspect, it's kind of like the Venus retrograde cycle in equity markets. If it's Venus retrograde in the S&P 500 and the NASDAQ and the Dow, almost always means that the market's going to go down only if prices are trading at or near all-time highs or important swing highs. If there has been a bear move or a corrective move right near a Venus retrograde cycle, it ends up being a bullish move. That's kind of what we got going on here, is that the Venus the Venus Sun conjunction, okay, and a conjunction means that they're like sharing the same angle. Okay, it doesn't mean that, again, it doesn't mean that they're in love with one another or that it's going to make your day better or worse. But historically, for Bitcoin, because we're trending into this from a bearish point, it is a positive signal. There's another one we have here. The sun. This is probably the most important one. Oops. Where is it? Sun. Opposite. Yeah, there it is. That is a important one. Sun opposite Venus. No. What am I doing? Oh no, Uranus. Sun opposite Uranus. This is a typically Uranus is a in astrology, like astrology. So astrology is astrology, like the weird stuff. Uranus is associated with change, but when this aspect shows up, even on short time frames and trends, there is a high probability of a move higher, even in the short term. But this aspect overwhelmingly shows that it appears near a right kind of near the beginning of an upward slope, or precedes the next rise. Does it happen all the time? No, not all the time. Shows up at a market bottom here. When you're comparing astronomical phenomena, you want to keep track of the stuff. So you want to keep track of what happens when it shows up, what happened before it showed up, what happens after it shows up. Because so if there's 10 years of data on Bitcoin, of chart data, roughly 10 years. And so you've only got, and that's not a long time. That's not a long time at all. That's like almost nothing. It's hard to use astronomical data with only 10 years. It's hard to do it with 30 years. You need a lot more data. But 10 years is all we've got to work with. So when I use this stuff, or if I keep track of any of these things, if there's 10 aspects that show up in the past 10 years, 8 or 9 of them have to show the same type of behavior. Otherwise, I don't like to look at it or use it. Then it's just like 8 or 9. And so with this one, the sun opposite Uranus, that is a positive cycle for how we have approached it. Okay. And then there's another planetary angle, which is Mars. Every 45 degrees of Mars. For whatever reason, that seems to be an important one as well, as far as excuse me, some swing highs. Swing highs and lows, it's an important one. I don't know why. It just seems to show up around those areas as well. And we had that just pop up on the 20th. So, yeah, there's a lot of, and actually the biggest thing with Mars is this issue right here. So if we look at the retrograde cycle, and we look at the retrograde cycle of Mars, so there's these gaps that show up. Every 45 degrees of Mars, you'll get these gaps, these wide gaps. See where it seems pretty consistent. You see the blue lines show up, except right here, there are these big gaps. All right. Look at the price action from here to here, and these gaps don't happen every year. Okay, they don't happen every year. This is from 2016 to 20. This is in 2016. The gap. What is the price action going on in here? Relatively flat looking. What's going on in here? Relatively flat looking. It is trending down, but for the most part, we've kept the same lows. It hasn't changed. The one before that, price range from here. Where was our close? Close and the open right here. Where did it close and open at the end? Over here. Pretty flat distribution range. The open and the close during this gap, pretty flat. All right. And then we have the same thing happen over here. So there's been 4 of these large gap zones between the 45 degrees of Mars. And for whatever reason, there's a pretty common theme of flat distribution from open to close from the beginning to the end of this gap. And then you see price movement. Okay, the only time we did not see expansive and rising prices was the Mt. Gox years. And in fact, you're going to see this happen. And actually, this was good to see have happen because then we can look at other astronomical conditions for, hacks are, I got to do a whole separate thing on that. But, and again, notice that there's the Mars retrograde is in there too. So we are outside of that now. So that gap has ended. It ended on my birthday on the 20th. Oh man, I had a gap year. Then we have a full moon that just showed up between yesterday and Wednesday. Full moons in Bitcoin. Especially if there's an apogee or perigee there. That's the other, and you can do this in TradingView too. You don't need to use this software. You can use TradingView. And go to a daily of Bitcoin and do moon phases. And you can tell that in Bitcoin's chart here. So this is, let's not use Binance, let's use, there we go. This is Kraken's data. What the heck is going on here? So in a bull market, for whatever reason, don't know why, but this is the same in equity markets too. Actually, the Bank of England did a study on the FTSE 100, and it was if you bought the index at every new moon and sold it at every full moon, you would have beaten the average by 18% or something like that. But you can see this in any market. It's not the same in every market, but there are behaviors where if we're in a bull market for whatever reason in Bitcoin, the full moons seem to be. Let me make sure I've got this right. Yeah, which is always confusing because it should be the full moon should be the white because it's bright, and a new moon where there's nothing it should be dark. But whatever. Full moons seem to develop some type of swing low or initiate another expansion move, and then where the tops usually major and minor tops or swing tops usually appear at the full moons. That is just something that seems to happen fairly consistently. And this is big in futures markets. People have known about moon phases in ag markets forever and a day. If you people who trade ag futures, they're big into financial astronomy. I mean, it is a big thing. And consequently, the CME, the CME, the Chicago Mercantile Exchange, the day that they came out with their futures contract was the day before the first major drive down in Bitcoin. It also occurred on a new moon. There's a whole bunch of other astronomical things there too, but just looking at the moon phases, you can get a pretty interesting trading idea just looking at those. Okay? And we just had a full moon just yesterday. So there's a bias for a rising market. We're already seeing that play out from the last 2 moon phases. We had a rise. We had the market close higher than it opened in this full moon phase, and then this sell-off or drop, 3-day drop, happened right at a new moon. Okay, so again, a lot of astronomical stuff we talked about today. It is totally relevant to financial markets, and I think you mock it or roll your eyes at it. You actually just keep doing that, because the less people know about this, the more people think it's stupid, the more effective this stuff is for those of us that use it. Yeah, but anyways, it's quite a dull market, not gonna lie. Some people might say that this is worse than a true sell-off bear market, but hey, again, one of the telltale signs that you're about to start an expansive phase is after you have a consolidation in prices, you have a drop-off in volume participation. So that is all this criteria is being met. And again, this is the most divergent price and time market that I trade right now. I honestly am pretty shocked at how long this divergence between time and price has lasted. And there will be a very, very violent move higher. It will happen very fast. So if you're, and I'm not giving out financial advice, but if I were you and I was sitting there with my powder dry, not in this market, if you're thinking I'm going to wait for it to go higher, you're going to wake up or notice the market someday, or God forbid you read it on the news, and you're already going to have missed probably the biggest profit potential gain because you weren't in it. All right. There is so much more reward to the upside here than there is risk to the downside. And that's all I got to say about that. Anyways, you guys have a great weekend. Have a safe weekend. Forex Lens, folks, I'll see you on Monday at 7:30. And the rest of you, I will see you on Monday at 1 p.m. Have a great rest of your day. Bye-bye.